All right, y'all. Well, there's a lot of turmoil in the world going on. A lot has changed in the last week. Obviously, we've seen major action in Iran that is moving the markets in a big way. First and foremost, y'all, we pray for all of those that are in harm's way. We pray for our troops. We pray for the success of this mission. That said, a lot of folks tune into this weekly video to see how the markets are being affected by whatever goes on in the world. So we're going to talk about that some today. Bureau of Labor Statistics, y'all. This is the monthly first Friday of the month labor report that moves the markets normally in a pretty big way, or has the potential to at least. And this morning's report should have given us significantly lower rates, and it didn't. And we're going to go into some of the reasons why. The report itself was much weaker than expected, y'all. 92,000 jobs lost. We expected 59,000 jobs to be added. So this was a big miss to the downside. And when you look at December and January, we had big revisions downward, 69,000 jobs pulled from those prior 2 months of growth. So very significant weakness in the labor market being shown by this report, folks. And it is something that would ordinarily bolster interest rates because it gives the Fed reason to cut interest rates and do some stimulus for the economy to encourage job growth. So that's why a report weak like this one would ordinarily lead to a rally in the bond market, which would cause interest rates to come down some. That didn't happen this morning. In fact, we saw a pretty sharp sell-off because of comments that President Trump made about the war in Iran, where he is requiring their unconditional surrender in order to stop hostilities in Iran. The oil markets did not like that comment. I don't know what they were expecting from this. I don't know why that statement would be a surprise. I think reasonable people looking at it would expect that to be the result, but in any event, oil jumped dramatically on that speech. Y'all, if you just look at the price of a barrel of oil today, it's up $20 in the last 7 days, a barrel. It's up $10 just today on the heels of that speech. Now, we've seen that back off a bit, and we have seen some of the downward or upward pressure on rates, downward pressure on bond prices improve through the day. So we are about back level with yesterday's pricing. But y'all, this is after 4 significant days of bond market sell-off that have pushed interest rates higher. Here's where the numbers are today with regard to interest rates. We are sitting today at the Mortgage News Daily national average for a 30-year fixed rate conforming at 6.14%. That same index had us at 5.99 a week ago. Remember, we talked about on last week's call that we had seen 3 of last week's days close in the 5s, which was phenomenal. Got a good messaging out there for folks that are sitting on the fence. Well, that quickly went away, y'all, with oil prices increasing as they have. 30 days ago, we were sitting right pretty much where we are now, 6.15%. So rates are pretty well flat with where they were a month ago, but they're not as good as they were last week. And this is the type of volatility, y'all, that really suggests that when somebody finds a house, gets something under contract, or has a rate that works for a refinance, they don't need to be floating in this environment. There's way too much volatility for that. If you've got something that is workable for your transaction and decent, lock it in, and that way you're not floating out there on the winds of change. What does this mean as far as, what does this morning's BLS jobs report mean for the future of interest rates? Well, pretty significant change in Fed futures, y'all. Yesterday, there was only a 33% chance of a Fed cut at the June 17th meeting. Remember, that is the first meeting with our new Fed chair that's incoming in May. There's now a 51% chance of a cut at that meeting. So the Fed futures have shifted pretty significantly just from yesterday on the weakness of this jobs number, y'all. As we see these global instabilities resolve a bit, as we see hopefully a quick end to the war in Iran, we will see oil prices come down. As we see that the Strait of Hormuz has not in fact been shut down, and that Iran now lacks the Navy to be able to do that, then my personal belief is we're seeing a temporary spike in oil, y'all. I think it'll pretty quickly resolve. I think the reality of the jobs situation, though, is going to start weighing on the market, and that will help interest rates. You know, we would all prefer to have a strong labor market, y'all, regardless of where interest rates were. But if you are focused on interest rates as a key part of your business, as in lending we are, in real estate we are, if you're in the market for a house, obviously you want to see how rates are going to be impacted by that. They should be coming down as the oil situation resolves itself and as we see that those markets aren't necessarily shutting down and being blocked off. In any event, I hope this is helpful as you plan for the future, as you plan for where you might be with regard to a purchase or a refinance. I'm always happy to strategize that with you folks. Always honored to have your referrals. You can reach me as always at any of the numbers that are on the screen. Stay blessed, stay safe. We'll talk to you next week.